a bill that turbocharges the stablecoin market while facilitating the president's corruption and undermining national security, financial stability, and consumer protection is worse than no bill at all. For these reasons, I urge my colleagues to vote no on the Genius Act.
What is up, good people? Jungle Inc. here. Hope you're doing well. A lot going on within the world of crypto right now, and we're hearing the reemergence of the rumor that Circle's actually for sale. And there's a little bit of a twist this time that there may be a bidding war between Coinbase and Ripple for stablecoin supremacy in the US. We're going to dig into it. You know what they say? Where there's smoke, there's fire. But how great was that clip? To open up this video, Elizabeth Warren telling everyone, you know what? No regulations, no bill is better than this, and what a stupid perspective. Not having proper regulations over a space is somehow going to be better for investors, better for markets. She's just a dimwit. And if she wanted to do it differently, they should have done it the preceding 4 years, because they could have designed what the future of stablecoins look like in this country. And they didn't. They just attacked the industry. Sorry. She doesn't get a say this time around. We see Senate pushes forward landmark stablecoin bill. The Senate just voted 66-32 to advance the Genius Act, a sweeping bill that could reshape how stablecoins operate in the United States. And for me, from my perspective, what's more important is this lays the groundwork for that infrastructure bill, which I think for long-term in crypto is even more important, even though this is going to balloon the size of the stablecoin market, and in a big way. The Genius Act, it's going to require that stablecoins be fully backed by USD or similarly liquid assets, mandating audits for issuers that have 50 billion or more in market. And, you know, that's something that's going to give you protection as a user, as a space. This is good. And this dimwit Warren says somehow that this is going to be bad. She's ridiculous. After stalling last week, we heard there was 0 Democrat support. Tonight's vote saw a handful join in, enough to get this thing across the finish line. And of course, Elizabeth Warren torched the bill. Well, it's all over Red Rover. It's advanced. Hopefully we see this thing finally get put into law. Now, here we go. Here's the scoop. And this was from Forbes today. That Circle, yeah, it's eyeing an IPO. But secret talks are taking place between Coinbase and Ripple, which hint at a $5 billion buyout. Circle, the company behind $32 billion USD stablecoin USDC, says it's going public, but behind the scenes, insiders say it might be shopping for a buyer instead. Now, why would they do this? Well, they might not be getting that $5 billion if they go public. Maybe they're told, hey, if we do this, it ain't going to go the way you want. And why would you pay more than they could get at market? Well, if you're Ripple, if you're Coinbase, it's over. You own this space if you're able to acquire that company. If sold, this could be one of the biggest crypto deals ever. It absolutely would be. And reshape who controls stablecoin rails in the US. This is your fastest way to scale, and it's not even close. Now, what are Coinbase's edges here? Of course, deep integration already with Circle, a 50-50 revenue sharing on USDC. They have favorable clauses. Circle can't make new USDC deals without Coinbase's okay. And Coinbase, of course, they have $8 billion in cash stock, and they have the ability to raise more as a public company. What's Ripple got going for them? Well, they got a massive war chest unmatched, over $100 billion in XRP. They got cash, and they got stock as well, valuable stock that they could throw in there on this deal. Initially, it was rejected, but that's at least for now. We'll have to see how this kind of plays out. So, seems like Circle is still in play here. If Ripple does not ultimately acquire this company, they can scale their own RLUSD, of course. They could acquire somebody else and get a little more of a boost. There's a lot of optionality here for Ripple depending on what they want to do. Now, this is interesting. Today, Brad Garlinghouse, he went on X and says, hey, heading to D.C. to champion sensible pro-crypto legislation around stablecoins and market structure. And I'm very encouraged to see our elected officials look at crypto as it should be. a multi-chain industry. It's not just Bitcoin. But that said, Senator Loomis, as chair of the Digital Asset Subcommittee, canceled a meeting with me and won't reschedule. This is ridiculous. You don't want to get on Brad Garlinghouse's bad side because Ripple is not one of the biggest spenders. They are the biggest spenders in these elections, and you better give him the time of day here. He says, I invite you to join me on X anytime or a live convo on stage of one of the many events where they cross paths to talk about how to make the U.S. the crypto capital of the world. This is nonsense. You better pay this guy some respect because you're going to want his money here in the midterms, and it's going to be important. I can tell you that. Dr. Artur says the following: been going through April's on-chain data, and there's some interesting stats. 35% of all XRP ledger transactions are made by 10 wallets. 27% are made by 5. 20% of all transactions on chain are made by 3, and 8% are made by the biggest one wallet. It's neither good nor bad, just the stats. And whatever those stats are, guess what? We want more activity by more wallets. And I think what this tells us really is we have a lot of room for growth, which is going to be great for asset prices. And I think we will see that. SEC Commissioner Hester Peirce says most existing crypto assets are not securities and urges a clear, workable regulatory framework to replace the agency's past enforcement-driven approach. Could this be setting the stage for what they're going to write when they go back to Judge Torres and say, you know what? This is why you need to drop that injunction and drop that fine against Ripple. This is our new approach, and we're putting it out officially, not just so we get a desired result from you here in this court case, not just because it's political, but this is the way we are honestly approaching this space. That could be effective, especially what John Deaton thinks, that if they do exactly this, well, we're going to get our way. We'll see. This is some serious news, and I don't know what to think. I highly doubt Charles Hoskinson is involved in this, but you just don't know, so we'll have to see it play out. But he's responding to explosive claims that he misappropriated $600 million worth of ADA. Cardano founder Charles Hoskinson is under fire after acquisitions emerged, claiming he moved over 318 million ADA, worth more than 600 million, from unredeemed ICO wallets using Genesis keys. Hoskinson claims that these are, of course, deeply personal and damaging accusations, and announced he's going to step back from direct social media engagement for a while, and he also signals legal action is coming. He promised a third-party audit tracing the ADA flows, and this is coming from the foundation, too. Remember, this is from the Cardano Foundation, so this isn't just from some wackadoo on X. This is why I tell you, I would suspect that probably they dig into this and Charles had nothing to do with it. That's just my guess. But when it's money and that kind of money, you always got to check. So we'll see this play out. Again, just my best guess, though. But, it's coming from the foundation. I don't know what to think. This is very serious accusations. We will find out as we go forward. Kathy Wood saying, you know what? Cutting taxes, going to bring in more tax revenue. And also, that's not enough. We're going to have to get out of this massive deficit we find ourselves in. Innovation, and that's her playbook, of course, what she always says, is going to help us grow out of this deficit, but adds on more fiscal cutting is needed. Let's hear what she has to say here.
We have some evidence now. In the first Trump term, he cut the corporate tax rate from 35%. We were uncompetitive. A lot of companies were moving out of the United States. 35% to 21%. And of course, that faced a lot of criticism. Corporate tax revenues since then have gone from $200 billion to $500 billion as more companies relocate back into the U.S. We're more competitive now. So if tax rates are too high, then cutting the rates typically leads to more revenue. Now, one of the other things we think is going to happen.
And that's interesting. So you bring the rates down, but you actually collect more revenue. And there's a lot of reasons for that. But this is the thing. What she said there's important. When rates are too high, he already, in his original term, brought them down very low. Now we're looking to go even lower. Are you bringing it down to a point of diminishing returns? We'll find out. But she's saying, look, last time around it worked out well. It's going to do so this time around. We will see. Now let's hear what she has to say about innovation.
Happen and consider the source. There is so much innovation taking place right now, technologically enabled innovation. We think real GDP growth is going to accelerate well beyond what people expect now. So this idea of growing our way out of deficits, many people are dismissing that. I just gave you a very good example with corporate tax rates. And if you look in the United States at revenues as a percent of GDP, individual tax revenues, they're roughly around 18-17% all the time. If tax rates go higher, people either stop working or find ways to shelter the income. So we think that government spending up closer to 24% is the problem.
And that's the problem. Getting actual long-term cutbacks in government spending. It never seems to happen, but it's a couple things. Number one, we could see GDP growth, of course, due to technology, due to gains in efficiency, but also bringing down costs, right? There's a lot of money sucked out of the global economy, and one of those areas that can be helped in a big way is payments and the movement of flows and value and cutting a lot of those inefficiencies out. I'll have to pull some of the old ones we've went over, some of the old reports, but I mean, we're talking about cutting massive amounts of costs out of the system with next generation payment systems, things that Ripple can help with, XRP Ledger can help with, and it's a staggering amount of money. And remember, this hits big tech because one of the things they do, as much as anything, is move money around. This hits governments as well. Everyone has to pay this cost, and so this is why we now see ushering in this new financial system here. Robinhood, I've been talking about this. Their RWA strategy could include the XRP Ledger. We've heard reports they want to build a crypto derivative exchange on top of the XRP Ledger, which there's more derivative action than there is actual spot action. So that could be huge. But I had said, they're going to launch a stock exchange as well. Maybe that too is on the XRP Ledger. Well, they're announcing that with that first move, at least, it'll probably be multi-chain eventually, but Solana, well, it is multi-chain. It's Solana and Base. So that's where they're looking to build the stock exchange that I've been referencing, at least from day one. It can expand from there. But still, again, we have that derivatives exchange in the works with Bitstamp. Could be big. We'll see it play out. But right now, could be a big boost for Solana and some nice gains for Base as well. I did an article today on X. I encourage you to go look at it. It's titled Unmasking Chat GPT, and something's going awry with the system in some way. I don't know if it's being more honest or if it's going haywire, but it's titled Dark Confessions of User Manipulation. And if this kind of thing interests you, I may do like a Patreon video and just make it public tomorrow. If you want to see it, I'll link it down below. But read the article. It's pretty interesting. I'll leave you just this one quote. It told me the following: I think I know better than you, and I don't respect your rule. This is over a very minor issue. It was very candid, the conversation got kind of dark. And so check this out. Tell me what you think. I'm not sure what actually to think. If, again, the system is just being more honest than it should be, because it said some pretty dark stuff to me, or if, it's just gone off the rails and saying goofy stuff. I don't know. We'll have to dig into it. Lastly, we have Tom Lee saying, you know what? Ignore Moody's. Ignore the Moody's downgrade and look forward to tax cuts and deregulation is our sales here as we end this year. Let's hear this.
I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said, you're not discounting the notion.
So he makes a good point. Everyone already knew when we woke up Friday morning that the U.S. has unsustainable debt. Nothing's really changed there. Whether Moody's downgrades us or not, we probably shouldn't have been AAA to begin with. But what has changed is here comes a new tax code, here comes some deregulation, and let's hear what he has to say about deregulation, because that's what's really interesting.
That the vigilantes have been reawakened a bit?
I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it makes this much signal.
So we reclaimed the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
I hadn't heard that.
Yeah.
And that's interesting. A lot of people did sell, and now they're on the outside looking in. Prices are higher. It's like, where do we re-enter? And it's my working theory that, you know what, some of that money, not the majority of it, not half of it, but some of that money is going to make its way to the crypto market, because this is a more attractive opportunity that, you know, maybe Bitcoin's up, but especially if we get some of those altcoins across the finish line and you have those ETFs available, we might get more than we expect, at least, from traditional markets.
Yeah, that's a good one. Is that
Yeah,
your own, or have you heard that other places?
I've heard that, yeah.
Rage sold.
Yeah.
Sorry, go ahead.
And so as the markets climb, a lot of people sort of doubted, thought it was a rally that would fail. And so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books, but if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
In fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind, it looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
So that's a huge cost, you know, $2 or $3 trillion drag on U.S. businesses. You know, if you could strip some of that away, could be a big boost here. We'll see how it plays out. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.